So, what's your business actually worth? If you own a business here in Northeast Florida, I bet you've asked yourself that question. And I'd also bet you've gotten three different answers from three different people, none of whom could really explain how they got there. I'm Ryan Winter. I'm a business broker in St. Augustine, and helping business owners answer that question is exactly what I do every day. And even if you're not in Northeast Florida, stick with me because these principles apply to any business owner thinking about selling their business. So, in the next 5 minutes, I'm going to show you how businesses like yours are really valued with no jargon, no guesswork. So, you can walk away with a grounded idea of your own number. That is, how much your business is actually worth. So, here's the whole thing in one sentence. For most small businesses, value comes down to two numbers multiplied together: your real earnings times a multiple. Perhaps you've heard those terms before, especially multiple. Sometimes it's confusing. So, let me break it down: your earnings, what the business actually puts in the owner's pocket, and the multiple, how many years of those earnings a buyer will pay for upfront. So if your business earns $300,000 and businesses like yours sell for a multiple of three, you're in the neighborhood of about $900,000. It's a pretty simple idea. The whole skill is getting those two numbers exactly right. And this is where most owners get it wrong. Let me show you how. Number one, your earnings. Here's the mistake almost everyone makes: they look at the profit on their tax return. That is not your earnings. The number buyers actually care about is called seller's discretionary earnings, or SDE, and it's almost always higher than what your tax return shows. So, why is it higher? Because we add back the things a new owner won't be paying for. We add back your salary, a buyer replaces you. We add back interest, taxes, and depreciation. We add back one time expenses. And we add back the personal stuff that runs through your business, which is very normal. Things like your vehicle or your phone or business travel. And this is genuinely what matters most because every dollar we add back gets multiplied. A $10,000 add back at three times multiple is $30,000 of value. That's $30,000 in your pocket when you sell your business. That's why owners are so often surprised. Their business earns 40, 50% more than the tax return ever showed. Okay, so number two, the multiple. If earnings tell a buyer how much you make, the multiple tells them how safe those earnings are once you're gone. Basically, how predictable is your business? Most small businesses around here trade between two and four times seller discretionary earnings. Where you land depends on what we call value drivers, things that make your business more valuable. So let me give you the big ones. Number one, and this is the big one: owner dependence. If the business can't run without you, you're not selling a business, you're selling a job, and that pulls your value down hard. The next one is recurring revenue. Customers who come back for repeat business, who are on some sort of subscription plan, that's worth a lot of money. And then customer concentration. If one client is half of your revenue, a buyer sees that as a huge red flag. And your trend. Is your business steady or stagnant, or is it growing? Does it look like your business is going to make more next year than it did this year? If it does, that's a good thing. Also, some of the basics like having clean books, clean financials. Do we know how to figure out what your business is worth based on the numbers? And do you have a team that can run your business a few step away? Those are things that move you from a two to a four when it comes to your multiple. And that's a huge swing in your final number, what your business actually sells for. Now, one thing I want to save you from: please don't value your business on revenue. You'll see it online. Restaurants sell for a percent of sales, that kind of thing. You can just ignore it. Or if your friend tells you that your business is worth XYZ because of XYZ, if they're not talking about multiples, then it's probably not accurate. So, two businesses can both do $1 million in revenue. One nets $250,000 and the other barely breaks even. They are not worth the same, no matter what some rule of thumb or your friend says. Value follows profit and risk every single time. So, here in Jacksonville and the Jacksonville St. Augustine corridor, demand has been genuinely healthy. A lot of buyers are relocating here looking to own an established business, which makes understanding your number even more valuable. So here's what I'd suggest. Even if you're not planning on selling, go to my website. I've got a free valuation calculator. Takes about 3 minutes. It's completely confidential and it'll give you a real data driven range based on your own numbers. It's not going to be 100% accurate. That's where I come in. I'll make it accurate if you want. But this doesn't cost you anything. There's no obligation. I'm not going to call and pester you. Just go run your numbers and see where you stand for your own benefit. And if you'd rather just talk it through, you can call me. You can also schedule a time to call me on my website. ryancwinter.com is where you'll find both of these resources. Because your business is worth understanding properly and knowing your value is really important. I'm Ryan Winter, and I'll see you soon.